What's up, family? Solo the Funder here. Welcome back to another episode of the Funding Show. On today's episode, I'm going to show you guys the simple strategy that you guys can use to access up to $300,000 in 0% interest, utilizing two people on an entity, whether it's an LLC or corporation. You need a partner to execute this particular strategy, but you can easily access $150,000 or more on your own. I'm going to show you guys the power of two in today's episode. So let's get into it. First thing that we're going to break down is the requirements, what you actually need to qualify for no doc, 0% interest credit card stacking. The most crucial part to qualify for business credit card stacking, you need good personal credit. Okay, so the first thing you need to focus on is having a good credit score. You're going to need a 680 or above credit score to take advantage of cheap money, 0% interest funding for 9 months, 6 months, 12 months, 18 months. So that's the foundation. Number two, guys, you want to have less than 4 inquiries per bureau, guys. I'm talking about Experian, Equifax, or TransUnion, and this is specifically in the last 6 to 12 months. Okay, after 12 months, on the 13th month, the amount of increase that you have do not matter. So banks are caring and focusing on specifically the last 6 to 12 months in activity, and this also goes for new accounts. Okay, you don't want to have more than 3 new accounts on the personal side in the last 6 to 12 months, because banks will deny you for having too much new credit because they view that as a risk. Okay, so that's very important, those two pieces. The next thing is no negatives in the last 4 to 5 years, meaning no collections, no charge off, no bankruptcies. All those things are going to only allow you to qualify for high interest amounts of money when you're taking on loans specifically. Okay, the more risk a bank is going to take based on your profile, the more they're going to charge you to cover that risk. That's just how it works. All right. So just like when you loan out money, if you had a friend or family member that was a little shaky on their borrowing history previously, you may lend them less money, and you may require them to, pay you back more money or pay it back faster. That way you get a faster return and recoup some of your money instead of risking losing it all. Okay, so think like a bank in a lot of scenarios, and it'll start making sense to you. Okay. So if you start thinking like a bank, putting yourself in a bank's shoes in a lot of these scenarios, a lot of this lending will start making a lot of sense to you. Next thing, to qualify for 0% interest funding and get the best products that are available out there, you don't want to have any late payments on that personal credit profile in the last 2 years. Okay, in the last 6 months, I would rate that as like red. You're in the red zone. You're going to have difficulty getting approved for 0% interest products. Then as you get over that year hump, I will put you back in like the orange zone. And then 2 years or older, you're going to be in the green zone. This is going to get you approved for, top products like the Amex Platinums, the Chase Inks and Chase Sapphire Reserve. All those top products that a lot of institutions have are reserved for people that have really good credit and don't show any risk of defaulting in the last few years. So keep that in mind, guys. Next thing that's super relevant, 3 to 5 primary accounts. These are accounts that's in your name that you're responsible for. If you want to do credit card stacking, business credit card stacking at 0% interest, which I'm going to break down in this video, it's very important that you have high limit credit cards that's in your name. I'm talking about $2,500 minimum limits, and what banks are going to focus on is called comparable credit. So the higher the limits you have on the personal credit profile, the higher you can expect to be approved on the business side. So if your limits are $10,000 or above, $15,000 or above, then you'll have the high probability of getting approved for 6 figures, $100,000 or more on your first funding round for business credit card stacking. So keep that in mind. So ideally, you want 5 accounts. I'm talking about $2,000 limits, $5,000 limits, $10,000 limits on your personal profile, and that's going to put you in a really good spot, right? The higher limit, the better. So a lot of you guys may have $20,000 from a credit union out there, $25,000 from a credit union out there. that's going to give you the probability of getting approved for 20, 25, maybe even $50,000 based on the lender for having that on your personal credit profile and subsequently having good utilization under it, right? Which is the next thing that's on this list, or should be on this list, but it's not. Utilization. Keep your utilization under 10%, guys. Under 10%. So if you have a $25,000 credit card, you don't want your utilization to be above $2,500 when you are running applications, okay? Lenders are going to look at a combination of the profile, the overall credit utilization, right? So the rule of thumb is 30%, but I'm recommending that you guys keep it under 10% for best results. They're going to look at overall utilization, so your overall credit accounts on that credit profile, and then they're also going to look at individual credit cards, okay? If your individual credit cards are above 30%, it's a high probability that when you apply for a business application with that bank on the business side, right? If you got a personal credit card that's above 30%, if you apply for a business credit card application on the business side with that same bank, it's a high probability that you'll either get denied or you may get a lower limit, right? So if you got high balances on the particular credit card that I'm going to mention with this particular sequence, you may want to keep that particular bank to the back of your sequence and really strategically maybe use some of the other funds that you get approved for to pay down that bank so you can hit them up at the end. So this is our strategy. These are the different things that we cover, when we work with you one-on-one, helping you develop a financial game plan and a funding strategy in any of my programs. You guys can visit me. I'm going to put the links below for individuals who need some help in actually implementing this strategy and need expert guidance and expertise. I'm going to put some links below in the chat, all right? Put some links below down there in the description so you can schedule your free consultation and see if you guys qualify to actually implement this and get this done. All right, so let's get into the meat and the potato. Next thing on this list is 2 years of personal credit history. The longer you have credit, the more credit you have, is going to be easy to get approved on the business side when you're applying for applications, okay? 2 years minimum. You can do different things to kind of manipulate the limits that you have on your profile and the age of your profile, like authorized user trade lines, okay? That's where authorized users, aka AUs, you guys may have heard of that. Those come in because they can be kind of like the cherry on top and boost you up to help you get approved for things on the business side or personal credit cards just in general. But they can help you with age and the amount of limits that's going to be on your profile. So again, I like using them as a cherry on top. If you got 3 to 5 AUs and only 2 primaries on your credit profile, you're going to struggle, getting approved for a good amount of funding. I'm talking about 6 figures specifically. Sure, you might squeak out 20, 30, 40, $50,000. But if you're talking about 6 figures and above, you're going to want to have a good personal structured profile. So again, those 5 primary accounts that's in your name that you're responsible for, specifically credit cards, when you're doing credit card stacking, is going to be very instrumental in that process. Then the next thing is 6-month LLC or older. With the LLC age, the older the business, the better, okay? So 6 months is very minimum. I've seen clients get approved for a $50,000 card with Chase, for example, having a 6-month-old LLC, but for big approvals like that, obviously that person had a really great credit profile. They hit all these data points and their scores were higher. Plus they had a relationship with Chase and different things like that. So it's a lot of variables in this. That's why you want the experts to look at your credit profile, help you strategize on a funding sequence that is specific for you, because this is going to be just the basic qualifications, but every profile is going to be different. So to make sure that you're actually hitting the proper checklist, guys, again, click some of these links below, check it out. We'll put together a free consultation for you that we can look at your profile and see where you're at, see where you need to go, and see how we can help you get that done. All right. So the next thing I'll break down is actually what a funding sequence looks like. Okay, when you get ready to prepare for a funding sequence, all that means, guys, is the particular banks that you're going to apply for and when you're going to apply for them. So it's the list of banks that you're going to apply for, and when you're going to apply for them, that's your funding sequence and funding strategy. Okay, so we're going to put one together, and I'm going to show you guys some of the common banks that most funding companies go to get you approved, because this is a great places to start. So first question that a lot of people ask is, where can I find 0% interest cards? And my answer is everywhere. When you guys are dealing with a funding company or applying for credit on your own, easy places to go is going to be literally the top institutions. Most funding companies are going to run you through 0% interest at the top institutions. This is a website called Bank Branch Locator. This is going to give you the top 50 banks in the US, right? Let's say, for example, Chase, Wells Fargo, Bank of America, US Bank, PNC, Truist, Regions, TD Bank, Fifth Third, Citizens, right? Let's say these top 12 banks you look at, okay? One thing is that you have to keep in mind is that not all these banks are going to be in your specific state, wherever you're at, okay? Some of these banks only work in 15 states. Other banks only work in 11 states, 22 states, 11 states here, right? So most funding companies are going to run you through Chase, Wells Fargo, Bank of America, US Bank, Amex, right? All those places, just for example, they have 0% interest products, and I'll show you guys what that looks like. So the first bank is going to be Amex. So with Amex, guys, they have the Blue Cash and the Blue Plus are going to be the two credit cards that offer 0% interest funding for 12 months, okay? After those 12 months, you guys see the interest rates. It'll go to 17 to 27%. If you guys are liking this video and you guys want me to show you how to kind of keep the 0% interest going after the 12 months in, just drop that in the comments. Let me know. I'll make sure that's one of my next videos. So I'm breaking this down and giving you guys the game here. All right. So the second bank that was on that list was Bank of America. With Bank of America, a lot of their business cards are going to go for like 6 to 9 months. Okay, so I'll give you guys the options on those. So with Bank of America, they have this silver card here, right? This is going to go for 0% interest for 9 billing cycles. The next one for 0% interest for 9 billing cycles. So these first four typically are 0% interest for 9 billing cycles, right? Here's the other one. 0% interest for 7 billing cycles, okay? So keep that in mind, guys. A lot of these institutions do offer 0% interest, just like Chase. Both of these credit cards are 0% interest for 12 months, along with US Bank. They have this platinum card that's 0% interest for 12 entire months. Okay, so again, those are a couple of banks where a lot of funding companies are going to go first to apply. The difference is a relationship manager. If you have an insider, a personal banker, somebody that deals with you directly in the bank, it's a higher probability that you can get approved for more. So that's the benefit of working with, you know, an experienced company. A lot of people put the wrong stuff on the application, which forces them to get approved for lower limits or often get denied, versus knowing the insider data points and really the strategies to maximize the bank specifically. Okay, so that's really the difference. But let's say, for example, we got 3 bureaus. Okay, you're putting together your first funding sequence. I gave you guys a couple of those banks. So let's say Chase, they're gonna pull typically Experian and TransUnion. So we're gonna put them on both bureaus. Sometimes based on where you are in the United States, they may only pull you know, Equifax, right? Or they may only pull TransUnion, I've seen, right? So it's different variants of the bureau that's going to be pulled based on your location. All right. So the next one that was on the list is Bank of America. So with Bank of America, for their business credit cards, they're going to pull TransUnion traditionally. So you can put that in that column. Amex. Right, Amex is the other one that we talked about that's going to be on Experian. I would actually probably apply for Amex first with Experian, because Amex has this new feature called Apply with Confidence. So it lets you know how much you're approved for upfront, or not how much you're approved for. They're going to let you know if you're approved at all upfront before you even get a hard inquiry, if this is your first time applying with Amex. If you already have a personal credit card with Amex, you should not get any inquiry at all. So it's going to be safe to take whatever offer that you get just in general here. Okay, so keep that in mind, guys. Now, so that's why I would start with Amex first, because they're going to give you the approval upfront and you're going to be pre-qualified versus places like Chase, versus places like Bank of America, some of these others, you're not going to know until you actually pull the trigger, okay? And get the hard inquiry if you're approved or not. So that's why I would start with Amex. Others that we went over that were on this list was US Bank. So I'm putting these here based on what bureau they're going to pull. Okay, so as you guys can see, based on this list so far, we're looking at a lot of hard pulls from Experian and TransUnion. We could keep going. Based on where you're located, PNC, that's another big bank that you may see. Based on where you're located, another major bank that you may see is Citizens, right? So Citizens is now looking at Experian, okay? So keep that in mind, guys. When you are running your sequence, you want to kind of identify what banks are going to pull what particular bureau. That way you can strategize on what place to go to first. And as I mentioned, one giveaway was you can literally go to the places that do like a soft pull pre-qualification or soft pull all the way without any hard inquiry first before you go to some of the other places that does a hard inquiry. Another one that I want to highlight on this list is Citizens. If you're near a Citizens bank, on the business side, it's going to be a soft pull approval all the way through on Experian. If you apply on personal, they're going to pull Experian, do a hard pull on Experian. But on the business side, it's a complete soft pull. So it's little nuances and things that you want to know and do some research before you go out and apply. But this is pretty much like all you need to know to run your first $150,000 sequence. So let's get into some numbers and some specific outcomes that you guys can see from applying for these 7 places, for example. So as I mentioned at the beginning of the video, I want you guys to do this with 2 people, okay? Person 1 and person 2. So this second person can be a spouse. This second person can be a business partner, anybody else that you can add to your LLC or corporation, 2PG that has good credit. I showed you guys the qualifications, what you need, 700 or above credit score, all those different little data points there. You want that person number 2 to match person number 1 as well, okay? And this is what you guys can expect. So let's say, for example, with Chase, you can get anywhere from $25,000 to $75,000 per credit card. A unicorn situation happened. I saw one person get approved for like $100,000 on one credit card, but Chase is all based on revenue. So the more money your business makes, the higher you have the approval, opportunity for. All right. So we can add that for both buckets here. Chase, right? 25K to 75K based on the personal credit profile, based on how much revenue that business is going to make, and the age of that business is going to determine how much a person gets approved with Chase. So the next bank here is Amex, okay? Amex, guys, what you can do is you can apply for both of those 0% interest credit cards, and those are going to land you somewhere from $10,000, well, it could be lower even. I'll say $2,000 is the lowest I've seen with Amex. Based on what you got on the application, your business, your personal profile, your business age, you can get anywhere from $2,000 to $25,000 starting off with Amex without any relationship with those cards. But again, you can do 2 cards, so we'll double that. US Bank is the next one. You can get anywhere from, I would say 3K is the lowest I've seen with US Bank, up to 25K without having a prior relationship and, money in the bank and different nuances that can help sway that application approval. So I'll put that down here as well. And then the next one was Bank of America. Now with Bank of America, guys, you need to actually have a relationship with them before you apply for any of their credit cards, right? They're a relationship-based bank. So, oftentimes without a relationship, you can't even expect, approval at all. So keep that in mind. I would open up that account. I will put some money in there and have it sit for at least 30 days before I apply with Bank of America. But with Bank of America, what's cool is you can do up to 4 credit cards in a 24-month time period. Okay, so you can apply for these back to back on the business side. Right. So hypothetically, let's say you get approved for, let's say 30K with Bank of America. That'd be a nice hit across 4 credit cards. So this is how it will go. Essentially, person 1 will step up to the plate and you would apply for them first. Okay. after person one applies and gets approved, on your operating agreement, you switch the ownership to 80-20. So you want to flip flop. Don't do 50-50, guys. If you do 50-50, it's a big mistake people make. When you do 50-50 on applications, that means the individuals, both owners of the business, have to apply and be approved for that particular credit card at the same time. Okay, they will not allow you for one person to apply at a time. They'll put both of them on the application, and that's where people screw up. So with this particular strategy that I'm breaking down for you guys, this is going to allow you to both apply for your own separate business credit cards and really maximize the amount of approvals that you get just by simply flipping ownership at the time of the application. Okay, again, most banks will allow, if you're 80% owner, to be the only one on the application at the time of the application, okay? Without needing that other person's credit, without needing to do a hard pull on that other person to approve you guys at all for the application. This is high level strategy here. So when we go back to this, now we say the first person, you step up to bat, and let's say person number one, based on all these different opportunities, 4 opportunities here. Let's say person number one scores, I'll just say 90,000, right? Which is very reasonable with those 4 banks. Person number one scores 90K on their first round. So we'll write 90,000, 90K. Again, you go to person number 2 and you apply second. And now person number 2, they score, let's say person number 2 has an even better profile than person number 1, and they score $110,000 from those 4 institutions. Now we're at a total of, and this is across 4 credit cards, okay? Well, 4 institutions, I should say, because some of these places that I mentioned, you can get multiple products with those particular lenders, okay? So let's say, for example, 2 people run the applications and they get approved for $200,000, okay? Now we at 200K and 0% interest. We've done it multiple times. I've seen it even better than $200,000 in a lot of instances, but those were just those 4 that I mainly mentioned, right? Imagine if you throw in a couple more applications, because I didn't really have an opportunity to talk about Equifax, banks that pull Equifax really in this video. But let's say, for example, you score 45K per bureau, right? Because we only talked about Experian and TransUnion, 45K per bureau with person number 1, which is total 90K. And then for person number 2, you get 55,000 per bureau. Okay. Now you're rolling. Now you can make your moves, invest in a business. You can buy a business. You can put in marketing, whatever you have that's going on right now. But this is the best strategy to get, up to $300,000 in 2025, guys. So if you guys are here new to the channel, I like giving you guys practical information that you guys can make a move on. Very easy sequence that you guys can run. Again, different variables that's going to be important is personal credit profile, the age of the business, the industry of the business as well. That can be a variable. Previous relationships. If you have relationships with some of these institutions, you can get approved for more. Application details, what your business is actually doing, what your business is actually projected to do. That can be the difference in a 10,000 approval versus 25,000. Or with Chase, for example, that can be the difference from a 25K approval versus a $50,000 approval, which is pretty common that we're able to get for our clients. Chat here, you guys can book a one-on-one strategy session with me. You can also do a free consultation with my team as well. I'll put that in the description so you can find those resources. If you want to continue learning, right, you'll have the opportunity to continue learning and get expert help. That will be in the description as well, guys. So hope you guys enjoyed this video. Like, comment, subscribe. I got more game coming for you guys. Let me know your thoughts. Let me know what next video you want to see. If you guys are interested in that keeping the 0% interest going video, I'll break that down for you.